Good morning, everyone. My name is Jordan Walker. I'm back. I wanted to do another update of how investing and portfolio management is going, just for my own portfolio and the reserves of our business. I've made a few videos about how we have really shifted over the last year and a half to a bigger focus on Bitcoin and Bitcoin related equities. And so far, obviously in a bit of a bull market here, but very pleased with what's been going on. I know I've been pretty quiet the last couple of months. I haven't hopped on or made a video or a short or anything like that, but I did want to give an update because we have hit a new all-time high in Bitcoin. It's jumped up near 119,000, and while that was really exciting, what's been more exciting to me is just the steady and successful nature of the returns I've been able to generate in my own portfolio, not just passively watching Bitcoin go up, but with some of the other instruments and option strategies that I've talked about before. So I just wanted to go through a few quick points. I made notes today so that I could stay on topic and hopefully get in and get out with this update. The first thing I wanted to do was obviously give a nod to the Bitcoin all-time high. That was really exciting. It's exciting to see the way that it's going up in a much more controlled manner. You can tell that there's just significant institutional adoption. There's significant adoption internationally going on. And at any point, it does feel like it could rip higher. And that is going to be interesting to watch. And that leads me to our first point that I wanted to go over. I've really developed a pretty strong conviction that we are definitely headed to at least $1 million Bitcoin. Now, I do believe what some of the other folks say, that it's going to continue to go up and it's going to go up forever. I do believe that, but I have very high conviction in the $1 million number. And I just wanted to go over why. Number one is that it's digital gold. And so the argument that it's at least going to get to gold's market cap, it makes a lot of sense to me. Gold's market cap is somewhere north of $20 trillion now, whereas Bitcoin is a little over $2 trillion. And so at a $100,000 price, you would expect at least a 10x to catch up to where gold is currently, which gold is probably going to be higher at that point too. I understand that that is a moving target, and that target is moving higher. But I think that the $1 million number is just very safe for that simple reason, that Bitcoin is superior to gold in so many ways, and many people are starting to realize that its portability, its verifiability, its scarcity, its absolute scarcity. Those things are things that you don't have with gold. And, seeing Bitcoin's superiority in all of those aspects, I think is going to result in increasing adoption and increasing use as a store of value, and ultimately a unit of settlement on an international level. And so it makes sense to me that we're going to 20 trillion plus. And so that's going to, because Bitcoin is scarce and defined in its supply, it's going to $1 million a coin. The other thing that I've started to think of is it's going to penny parity in terms of Satoshis. I haven't, forgive me if I can't attribute that to anybody else. I haven't heard anybody else use that phrase, but I believe it's going to penny parity, which is meaning one penny, one hundredth of the US dollar is going to equal one Satoshi. I believe that just makes sense. The smallest unit of the global reserve asset, or the global reserve currency, which is the US dollar, is a penny. The smallest divisible unit currently of Bitcoin is one Satoshi. I think those are going to eventually be equal. Some people think that one Satoshi is eventually going to equal a dollar. I think that's way out further on the curve. But I mean, I'm seeing this in the relatively near term. 5 to 10 years, I think that you reach penny parity. Obviously, these are educated guesses. But those are the two main conviction areas I have that leads me to believe that we're at least going to $1 million Bitcoin, is gold parity and penny parity for the Satoshi. So if those are compelling to you, wonderful. If not, you've probably got your own reason why you believe or don't believe in Bitcoin. Now, while I don't have any idea on the timeline, some people will say it's going to $1 million this year, 5 years, 10 years. I don't care about any of that. With low time preference, it's how I convince myself to buy Bitcoin. I've got a recurring buy set up on Monday mornings, and that Monday morning buy could be at $120,000. How do I convince myself to buy Bitcoin at such a high price every single week, the same way that strategy does, and the same way that so many people who dollar cost average do? How do I convince myself to pay that premium price, that all-time high price? Well, I believe I'm buying $1 million asset for still less than 85% of its future value. So that's ultimately what I'm doing. I'm buying future $1 million Bitcoin for less than $150,000 a coin right now. So that's how I look at it. Okay, let's move into portfolio update. Personal portfolio, I am around 10% Bitcoin, 10% of my investable assets. Of course, that doesn't include a lot of things like real estate and business assets and things like that. That's investable portfolio assets. 10% Bitcoin. It's probably low for a lot of people, a lot of Bitcoin maximalists. I'm working it up. Keep in mind, I just got started in Bitcoin in early 2024. Well, I dabbled in it and lost money in it several years prior, but finally got conviction and consistency last year. And so getting up to that 10% mark was has been fun, but I'm a careful person, and that's how I'm getting in. Now, where I'm less careful is I developed very high conviction in MSTR. And so right now I have about a 26% exposure to MSTR stock, which sounds crazy. I've gone over in some of my previous videos how I'm able to stomach that type of risk and that type of volatility. Check those out if you want. But I do have 26% exposure to that. I have very high conviction that they're going to continue to go up. I also have purchased sizable allocations. This is within the last 2 months, so this would not have been reflected as much, except for Strike. This would not have been reflected as much in previous videos. I've got pretty significant positions in Strike, STRF, and MSTY, which obviously all are built on Bitcoin. So they compound my risk associated with potential drawdowns in Bitcoin. But I bought Strike and STRF below their par values. Actually, my cost basis on Strike is around $80, $82, I think, and it's trading in the mid 120s now. So that's that was a lot getting in at that right time, getting in early on, having conviction that it was going to be a successful preferred share product, and it has been, and I think it's going to continue to go up. STRF I bought right around par value, and it's already gone up into the 120s. So these have got some really good short term gains. But the main reason I bought those, Strike was the long term convertibility into MSTR combined with the dividend. It's what made that appealing to me. Currently, Strike is yielding around 6.5%. STRF is yielding 8.2%. So say all that to say, I don't think it's too late to buy those. If you don't have Bitcoin exposure, you don't want Bitcoin exposure directly, you don't want volatility of MSTR, but you want something, you want to get your foot in the door, why not buy one of these preferred shares that are very high on the capital stack and are going to generate significant yields that you can't get. I mean, these yields are like buying, energy limited partnerships. I mean, these are extremely good yields. I mean, other than those, I don't think you can get that kind of dependable yield. So go buy some Strike if you want more direct benefit if Bitcoin continues to go up. Go buy STRF if you're just wanting the higher dividend. They do have a new product called Stride, but that one does not appeal to me personally. Obviously, I have high MSTR conviction, Strike conviction, and STRF conviction. I don't love Stride for me. I'm glad they're selling it because they're using that torque to benefit the MSTR shareholder. You can look into that on your own. I don't want to get into that. I have also taken a pretty substantial position in MSTY just in my cash management account because I've always liked to build that account up as it's grown. I've liked to try to build a dividend engine and an income engine that is going to pay me. And so I look at that. I look at that account as like rental properties. Like I want it creating cash flow, not just appreciation. I understand there's taxes with that. I understand all that. But I want it paying me, and then I can determine what to do with those payments, whether that be reinvesting or putting it in something else. But a little bit of Misty in a portfolio can jack up your overall dividend yield. So it's a fun product, and it'll be fun to see if it continues to perform the way it has. It's relatively new. I think it's less than 2 years old. And what they do is in a synthetic way, they are using the covered call strategy and selling the volatility of MSTR. So they capture some of the upside of MSTR, but they're generating big yields by selling covered calls essentially in a synthetic way. Why MSTR is heavier in my portfolio than Bitcoin? That's a variety of factors. Again, I've talked about those in past videos. Number one was early necessity. In my business account, I was not allowed to buy the spot ETFs when they came out, the spot Bitcoin ETFs. I also didn't want to self-custody that within my corporate business. So I said, I'm just going to take a smaller position in MSTR and get the exposure that I was looking for. Over time, as I owned substantial amounts of that in both my business and my portion of portfolio, I've continued to study and follow it, follow the True North guys, follow Strategy itself. They put out tons of content. You can see here's strategy.com. I mean, they just put it all out there for you. So I've started to follow the company, follow Michael Saylor, and my conviction's just gone through the roof that they are building, something that is uncatchable, unstoppable, and it's going to be an important Bitcoin bank in the digital economy. I also think that they're in the best position, that they're really not. Again, they're uncatchable. So these other Bitcoin treasury companies are just going to drive them up, and they're just going to pull further and further ahead. They are going to cite, but they're already putting these products out there. We already mentioned STRK, Stride, convertible bonds. They are pulling money that is trapped in these horrible fixed income bond pools, and they're pulling that money into Bitcoin exposure because it's hungry, it's starving for yield, and they're going to suck so much capital out of that, convert it into Bitcoin. And so they really have created a financial engineering phenomenon that I believe in. The other reason that why MSTR remains heavier than Bitcoin even today, when I do have ways to now buy the Bitcoin ETF, to buy spot Bitcoin, to self-custody, to multi-sig custody, all those things, I have access to that now. Why is my MSTR position still heavier than my Bitcoin position? Well, it's because of that conviction. And the reason that conviction is so high is that the MNAV remains below 2. Again, you look at strategy here, it's right at 1.9 based on current MSTR price as a function of current Bitcoin price as well. Looking at this chart, this is why I'm still holding on to MSTR. Just take a look at this for just a second. This is 2025 right here. We're actually in 7/2025. You would expect the 10th percentile to be literally around 2.3, and we're sitting at 1.9. We're way down here, closer to the bottom 1 percentile of historical MNAV. And so my expectation is that the MNAV is going to blow out again, and it's going to blow out to 3 and possibly even 4 and beyond. And when that happens, that is when I will probably take profits, rotate back into Bitcoin some, and you would see that 26% and 10% start to maybe balance out or even shift more Bitcoin heavy in the event that the MNAV gets really frothy. But at below 2, if you understand strategy and you believe in it, I think you're buying. I think you're buying strategy at a discount, even at nearing all-time highs. It's at $430+ a share because they own so much more Bitcoin than in the past. As long as MNAV is below 2, I think you're buying it at a discount. So I'm going to keep holding and probably even adding to that position. Okay, a little bit of an options update. Talked about how I was really getting into covered calls, and then I think I did a short video on when I had some shares get called away, how did I respond? And that involved using cash secured puts to try to position myself to get back into that position. The last month and a half or so since that video, we've seen the share price of MSTR drop from around 415, 420, where it topped out, reverting back into the mid to high 300s. It was really just kind of hanging out 350 to 370 for the last month until here recently with this recent run up in the Bitcoin price. At that mid 300 price level, I didn't think covered calls were all that worth it. So I pretty much stopped selling covered calls. I would sell some way out of the money, but I wasn't getting hardly anything for them. So what I did is I shifted to a focus on those cash secured puts. The cash secured put is you have the cash in your account to cover a put option that you are selling. When you sell a put option, you're selling an option to another person that you will buy their 100 shares of MSTR at a predetermined strike price. And so what I was doing was I picked a strike price that I would buy back into MSTR, which was right around at the money or slightly out of the money. So let's say MSTR was trading at 375 on a given day. I would say, okay, I'll sell a 2 week out put with a strike price of 350. So if it drops down to 350 or below, I don't mind buying it at that price. Meanwhile, I'm getting paid to wait. Pretty sizable yields. And so I've been able to continue to generate. If you look at the amount of cash that I was putting at risk during those 2 to 3 week expiry periods, I was putting, if you look at that as the total, I was generating between 30 and 50% yields on each of those contracts by selling them slightly out of the money. So I've been able to basically, I say all that to say, I've shifted my strategy for how I'm using options. It's all still long-term bullish. It's all still giving me a lot of downside exposure to MSTR, but it's also continuing to capitalize on their volatility, generating pretty substantial yields. And let's just put it this way, I'm very pleased with the amount of cash I've been able to generate using both of those strategies. Just a quick note on that, because we are back up at 430, I've started selling covered calls again. And I'm a little afraid to do that because I think it could really just take off, and I'm going to be left out in the cold. And I've actually added on. Let me just talk about this real quick because I just think it's a cool strategy. So I sold a covered call with a strike price of $440 about 2 weeks out. That was when it had broken 400 again, and so I got a pretty good price on that $440 covered call. Now that's looking like it. I mean, I've lost money on that. It's worth way less than what I sold it for, way more than what I sold it for. So to buy it back or close it out, I'd lose money. But what I also did at that same time was I actually bought a leap. So a leap is like a long-term call option. I bought an out-of-the-money leap that's 18 months out. So it doesn't expire until I think January 2027, something like that. And it's out of the money, but I bought that. And so as in the short term, as MSTR's price goes up, it's appreciating at the same rate that my covered call is depreciating. So even if I have to buy that back at a loss, which I would probably do, I don't want to get my shares called away. If I have to buy that 440 call option back at a loss, I can then sell my leap and recoup all of that loss. So because of and there's a pretty wide delta between those strike prices, it's an interesting concept. I'm probably going to do more of that because it really just is a way of expressing my long-term bullishness on this company, and it protects me from short-term losses from being wrong directionally in the very short term. Okay, so getting a little out there with that, but I'm enjoying it, and I'm very pleased with what I'm generating there. So corporate treasury update. This is not talking about strategies, corporate treasury. I just wanted to give a quick update on our business because I just think it's interesting to talk about. Of course, I'm not going to talk numbers or anything like that, but obviously every small business needs to have a little bit of money in reserves. If you don't, and you're putting stuff on credit cards and things like that, or on lines of credit, you're in a dangerous place. If you've been fortunate enough and you're running a great business and you are able to set aside reserves, what are you doing with that? Over the last several years, I finally got sick of letting it sit in a checking account and just looking at it basically being devalued. So I opened up a cash management brokerage account. But all I've been doing for the past 2 years is buying short-term T-bills, CDs. The most aggressive I got was, I think it's maybe SPHY is the ticker. Check me on that. It's a high-yield bond fund that yields somewhere around 7.5%, but is more volatile. That was as aggressive as I've gotten. So I was generating around 5 to 6% return, very low beta, low volatility. So it wasn't, much drawdown risk at all, which was fine. I needed that money to be available for the business. I got more comfortable taking more risk this year with at least part of that portfolio. And we have Bitcoin, MSTR type exposures much more risky equity type exposures, risk on type exposures, with about 30% of that money now. So still an incredibly, even though that 30% is in an incredibly high volatility area, Bitcoin, MSTR, that world, 70% of that money is still in these really low vol safe assets. So that's kind of where the balance is. But with doing that, with doing some of these covered call strategies, with actively managing that portfolio this year, I'm up 17% year to date through half the year. Is that going to continue? Am I going to be up 34% at the end of the year? I really doubt it, but it's possible. Do I think that long term doing this, I'm going to absolutely slaughter the 5 or 6% that I was getting? Yeah, I think I am. That's why I'm doing it. I think long term, it's going to be the best use of that money. And it's making the money that's sitting on the sidelines actually work for our business, work for our employees, work for our customers to create a long term sustainable business. And that's really, what it's all about is stewarding those assets well. Feel like God's put me in charge of business, the assets, all of that. I got to make good decisions on that. And so that's why I spend so much time doing it and researching it. And so far, so good. Overall, I'll just share this. Yes, I haven't been doing this all that long. I've been self-managing all of our portfolios, all of our accounts for 5 years now. Back in 2020 is when I pulled everything out of, basic mutual funds and having an advisor and things like that. I pulled it all out, started managing it myself. In nearly every account, I'm beating the benchmarks. So like in our cash management account, I benchmark it against a moderate, the 60-40 portfolio. I'm killing the 60-40 portfolio. Obviously, it's not that hard to kill a portfolio that holds 40% in bonds. But also in my retirement accounts now with the performance that I've had the last 12 months, I'm now on a CAGR basis, on a compound annual growth rate year over year. I'm up on the S&P. So that feels really good, really validating to know that, you hear you can't, you shouldn't, you should just put it here. That is true if you don't have conviction. But if you have conviction and you are willing to put thousands of hours in, like I have, and you're willing to put your money where your mouth is and to put money at risk, it is very possible to do well. Because that's what you're doing in a small business. You're putting your expertise to work to generate returns that far exceed what you could get just as a passive investor. So do I recommend everybody be an active investor? No. Do I recommend that if you're going to put the time in, that you be bold with it? Yes. Be courageous, be bold, and do the best you can with it. So hope everyone has a great weekend. I just really wanted to get on and talk through some of these things and give an update because I love this stuff. It's just very, very enjoyable and rewarding. Of course, we went through back with the Liberation Day stuff, went through some significant drawdowns, some substantial drawdowns. And, I remember being at the beach watching my portfolio be down 5% in a single day. Those are stomach churning things, but I pushed more chips in. I really do have conviction on these investments that we're doing and these strategies that we're executing on. So hope that's interesting and helpful. If you like it, leave me a like, but more importantly, I'd love to just hear your thoughts. So comment what you think, what you're doing. Let's interact. Let's have fun with it. Have a great weekend.